Did you ever follow how the Indonesian Stock Exchange, or IHSG, reacted to Donald Trump's reciprocal tariffs a few years back?
Oh yes, I remember that well. Trump's import tariffs, especially on Chinese goods, stirred up the global markets, and Indonesia wasn't immune to it.
Exactly. Since Indonesia is pretty reliant on international trade, especially with China, those tariffs sparked tension that directly impacted our stock market. IHSG took quite a hit.
Right. And don't forget, the Indonesian market is heavily influenced by foreign investor sentiment. When there's economic uncertainty like a trade war, many foreign investors tend to pull out of emerging markets. That's what we saw back then.
Yeah, and when big investors start selling, especially in sectors exposed to global trade like consumer goods or banking, it creates a domino effect. IHSG ended up being incredibly volatile.
On top of that, those tariffs didn't just affect stocks. They also hit consumers. Higher import costs meant higher prices, which can cause inflation and weaken domestic consumption. All of that hurts investor confidence.
It's ironic, isn't it? A policy meant to protect the U.S. economy ended up creating instability in markets worldwide. And for us, the result was capital flight and a falling stock index.
Not to mention the rupiah. During global trade tensions, the U.S. dollar tends to strengthen, and that puts pressure on the rupiah. A weaker rupiah can increase costs for businesses that rely on imported raw materials or have debts in dollars.
That's a great point. So even if a company isn't directly involved in exports or imports, currency fluctuations can hit them hard. And that just amplifies the stress on the stock market.
What's interesting, though, is how the market eventually adapted. After the initial shock, investors started to refocus on Indonesia's growth potential and fundamentals.
Exactly. Once the dust settled, people realized that while external factors matter, the Indonesian economy still had resilience. IHSG started to recover once that sentiment shifted.
It's a reminder that markets are emotional, but also adaptive. Still, we can't ignore how vulnerable we are to global policy changes. A single tweet or tariff can ripple through our entire economy.
And that's why tracking global trade policies is crucial, not just for economists, but for investors and even everyday people. What happens abroad really does hit home.
Absolutely. Hopefully, in the future, global trade can find more stability, so emerging markets like Indonesia don't have to ride out these wild swings so often.
Fingers crossed. And let's hope IHSG continues to grow stronger, regardless of what storms may come from across the ocean.
Here's to resilience, smart policies, and a market that keeps learning and bouncing back.